China's property market crisis has clearly weighed on the world's second largest economy.
Now, China is considering a proposal to have local governments across the country buy millions of unsold homes. And this is based on a Bloomberg report quoting sources familiar with this plan. Take a look at our next report to know more about this.
This rescue plan will be one of China's most ambitious attempts yet to salvage the property market. Bloomberg sources said that the State Council is consulting several provinces and government agencies on the preliminary plan. China has tried a few smaller programs to get rid of surplus housing inventory with state funding, but the latest plan would be far bigger. State-owned firms will acquire unsold homes from distressed developers at steep discounts, with the offer of loans from state banks, ACC, and other financial institutions. Officials are still debating details of the plan and its feasibility. But even if China's leaders decide to go ahead, it would take months to be finalized. If authorities do proceed, it would mark a new phase in the government's closely watched campaign to address the biggest drag on the world's second largest economy. China's home sales plummeted about 47% in the first 4 months, and unsold housing inventory is hovering at an 8-year high. This has exacerbated a meltdown that threatens to put about 5 million people at risk of unemployment or reduced incomes. Investors have been waiting for details of the government's next moves after the ruling party vowed to explore new approaches to ease the real estate crisis. A gauge of Chinese property stocks has rallied about 14% since then. While Beijing experimented in the past with state buying of unsold apartments, most smaller-scale initiatives met little success. In early 2023, the People's Bank of China made 100 billion yuan, that is about $13.8 billion, available to some financial institutions through a specialized lending facility. The money was meant to help 8 cities on a trial basis buy unsold properties for use in local subsidized rental programs. However, China's property sector is unlikely to stabilize until the gap between housing supply and demand closes. Unsold housing inventory climbed to 3.6 billion square feet last year, the highest since 2016. For the government to absorb the inventory, it will cost at least 7 trillion yuan, that is about $967 billion, or 78% of China's budget deficit this year. The plan to enlist local governments to reduce the housing glut could further exacerbate their debt level. China's debt has soared to 56% of the gross domestic product as of last year. Banks would also be under pressure as their balance sheets have already been eroded by rising bad loans and narrowing margins. Report, WION World is One.